Hi everyone, welcome back to Berich Podcast. Recently, Q4 results of Tata Motors was declared. One thing I noticed in Q4 result is that profit before tax is lesser than profit after tax. So in this video, we'll have clarity on why is profit before tax is less than profit after tax.
So what has happened is usually we make profit of 100 rupees.
Okay.
You pay tax on that. From 100 rupees you minus the tax and this is the profit which is left over.
Okay.
Correct? So in this case what people are saying is that's a profit of 100 rupees. Then Tata Motors saying they paid tax. Instead of saying 80 rupees or 90 rupees, you're saying 200 rupees.
How is that?
Yes, that is because Tata Motors is a global company. One of the main holdings is the GLR holding, the Jaguar Land Rover, which is based out of Europe.
Okay.
So there they've been making some losses and they've brought those losses forward into the Indian books here in Tata Motors and they've written those losses off into the Indian, they've claimed those losses here. So if you actually show the detail of the balance sheet with you, you can see item number 9, it says profit before tax. And it says 9,369.
Yeah.
Then if you see below that, it says tax credit and / expense net. So current tax, it says 1,318. Then below that, you see the deferred tax, which is what I'm talking about. This is a loss which they made. And it says referred note 6. So you can go to the balance sheet and you can read it. There will be a footnote called note 6 and you can read the details of that. That they've claimed back 9,478.
Okay.
So the net, if you minus that, right, the tax which they have to pay, which is 1,318, plus the tax credit which they've taken, you get 8,159. That added to the profit, right, before tax becomes 17,512.
Okay.
So this is the main reason. So like I told you this in many videos before, one of the ways corporates do this is they purposely create, I'm not saying that this purposely, but you see this in companies where they'll purposely create a situation where a heavy loss is there. So what they do is they bring that loss into the books and they claim that loss to reduce their tax.
Okay.
So a lot of movies, you wonder if the movies are becoming flops.
Yeah.
Why are they making these flop shows? Because he'll write off 1,000 crores.
Okay.
He'll say, I paid the actor, I paid light set cinema. That's why corporates like making movies, because if I am a multinational corporate, right, and I have a multifaceted business, I'm making, let's say, lots of profit in all my business, and I have to pay a lot of tax. But I create an entertainment business and I release 4 or 5 movies in that, and all those movies go bust. Okay, I can claim I spent so much.
Will not worry about that.
No, I'll say I spent all that money trying to make that movie, but it didn't make any money. All that money is lost. So then I'll bring the loss onto these books and show. This is the same way Donald Trump says he doesn't pay tax. He says, I made so much loss, in certain things.
Okay.
In those certain things which I made loss, though I made a profit here, net I don't have to pay because overall it is still a loss. So this is a way you can use your loss. This is a common business practice and it's allowed legally and it's also ethical. There's nothing wrong in it. If you're doing a business and you've lost money in it, you're allowed to claim that loss. So this is all that's happened here in terms of Tata Motors. The losses in GLR have been brought into the books here and they've taken the credit over here. And if you share the screen, everybody can see it and you can look at this in detail.
I'll place it in the video.
Yeah, you'll also be able to see it.
So they have shown that the profit after tax is more here. So how will be the next quarter?
We have to see how much more loss. They might not have written all of it off. Let's say they've only written a portion of it off.
Okay.
Or there's more accumulation of loss there. You'll have to really dig inside and find that information. Most important thing is the earnings per share. You have to remove this extraordinary 9,000 or 8,000, whatever they've claimed. You have to remove that.
Okay.
And the original tax before, then minus a tax, that gives you that amount, right? That is, you should take it and divide it by share, and that will give you the EPS.
Okay.
And then you take and divide it on price, that will give you the PE. If you take this extraordinary one-time, tax defer into account, then it will push your earnings somewhere, and then your actual PE which you calculate will not really reflect the PE which you have. So these are things to consider. This is one of the things why you should read the balance sheet, so you know, are the earnings which the company is showing really earnings from business, or is it earnings from some other source like this they're showing, through some accounting jugglery, they're showing something. So you should always check.
Is it good news for the Indian investors because it is more?
Yeah, it is great news for the Indian investors. I mean, that's because this is Tata Motors. There's more to this story than just the numbers. The numbers you guys brought up because it's anecdotal and it is something strange to see. That too from a Tata company. Before tax, the amount is smaller than after tax is bigger.
Yeah.
And it is little strange if you're not used to it. Why it's done. Any accountant or an auditor will know this, why this has happened. They will tell you clearly. But it's interesting. So for new investors, it's great information, great insight.
So I hope that this video is informative and please share it with your friends. Subscribe to this channel for more kind of videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.